Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scouten, jumping into the charts on this August 2nd. First off, I want to say congratulations yet again on the couple trades that we closed today. Also, I wasn't able to do a Friday video, but we did bank some profits on that day today. So yet again, we're continuing to manage our positions well, and we're starting to execute and bank, and we're really positioned on the short side of the market for this market to eventually take that turn to the downside. So as we're expecting more market turbulence, as many stocks have completed a congruent measured move to the upside, a lot of stocks are significantly off their low, have had major retraces, and have substantially recaptured a lot of the gains that were lost in the last 2 months. That being said, we still have to remember we are in a bear market, so I do think these indices go lower on the charts. But looking at the intraday action here, and while I do this video, I am monitoring a few earnings. We have Starbucks, PayPal, AMD, Unity Software, Occidental Petroleum. Those are some of the household names. So I may start issuing out alerts mid-video, but I'm going to be doing analysis on the major indices, S&P, Nasdaq, gold, silver, Bitcoin, the US 10-year yield, the dollar, and essentially transpiring and putting all of that together to formulate what could be transpiring over the next week or so. Again, I don't have a crystal ball. It's just noticing correlations and what certain chart patterns are doing and trying to get the best possible outcome in terms of what we think will transpire. So we definitely think the markets will be heading lower over the time. We're watching yields closely. We're watching the dollar closely. We're going to analyze gold as well, the S&P, the Nasdaq. So jumping into the S&P 500 here, overall it was a very choppy day on the indices today. So you can see by the latest price action that we started over here in our pre-market trading, and you had a little bit of a fall when you opened, and then you put in this beautiful reversal intraday bottoming tail, and you never looked back, and you kept on rallying, had a beautiful surge. That's a pretty wild move on the S&P from 406 to 413, just over $6 move there. And then you can see the weakness started to appear earlier in the afternoon, and it just continued to sell off. You made a little bit of a bear flag, and then it broke, and you triggered the bear flag by breaking this low. And it does seem that you're going to have more downside, but overall I do think it's going to depend on some of the bigger names that report today, like AMD could pose a lot of stress on the overall semiconductor sector, which we do know leads the markets higher and lower. You also have a household name like Starbucks that could set a precedent in terms of what their forward guidance may be. PayPal is also another important play. We just sold our PayPal because I wasn't comfortable holding it into earnings. It is extremely beaten down, so I do think there could be more potential upside for PayPal, but I wanted to bank our double-digit gains. Now, if the stock pops or drops, I will look to rebuy it at certain levels again. But overall, the very choppy price action, I think one of the reasons we're having this choppy price action, there's a couple reasons. Not only is there earnings, but if you simply look at the US 10-year yield. So let me just pull up the US 10-year yield. And if you look what transpired today, this was a magnificent move. And look at this reversal candle. You had a bullish engulfing reversal candle on the US 10-year yield. And the importance of this is that everybody has been monitoring this head and shoulders topping formation on yields. And I'm in the camp, I said this in a few previous videos ago, why we took off our UBT position for a beautiful double-digit gain is simple fact. I did think yields were going to rally, and the sentiment around yields in the bond market is that everyone is pricing in a more dovish Fed, because that's what they've done. Frankly, in the last 8 recessions, the Fed have basically stopped tightening and brought forth QE and zero interest rates policy over an extended period of time. And I don't think they're going to be able to do that as soon as the market is anticipating. For one simple fact, inflation is still too high and unemployment is still very strong at this point in time, but that will change eventually. But overall, I do think if this yields recapture, this will be a failed head and shoulders pattern, which ultimately means that if this head and shoulders pattern fails, the original downside was taking you down to about, I believe, 2, but between 2.5 and 2. So if this fails as a pattern, you could easily float back up to 3.1, 3%, and then we could substantially add to our yields position, our bond plays, and enter UBT again. But the fact that we covered our UBT, I think it was basically here on the 29th, we're already saved ourselves some profits. Now what I'm watching for on the yields, this is a critical candle formation in terms of how it closes on the week on Friday. It is going to be extremely important because now you've retraced back to the neckline where you've broke down on this head and shoulders formation, which ultimately triggers. If you recapture this neckline, then this pattern is no longer intact and you've had a failed breakdown on the yields. And believe it or not, the biggest moves come from failed patterns. So whether you have a failed breakout, you usually have a massive drop. Or if you have a failed breakdown, like this scenario, then you often could have a very strong move. And since we've put in such a bullish candle, a bullish engulfing reversal candle here, it does favor that continued upside is likely. So let's just continue to watch yields. If we look at the US dollar, that's also why markets were kind of under pressure. US dollar is now recapturing this bear flag channel. I'm in the camp we could at least float to the top of this channel. We could arguably move this trend line basically around here, around these flat tops over here. So let's continue to monitor the US dollar. If the US dollar continues to rise, it's likely going to help yields rise and then put pressure on the overall indices and stock market, because ultimately the stock market is liquidity. And I'm just here in the after hours. AMD is dropping. It is dropping substantially. Earnings are always wild. So right now, we are positioned for the short side of the market. AMD closed at 100, and it's dropping. It's dropping 10% here. Oh my goodness, this is great because we are short AMD, so this is terrific. So the markets are going to be under pressure, and this is all aligning with overall what's happening. If we look at the daily chart in the S&P 500, this is the SPX, so it gives you the longer-term picture of the daily chart, but overall you can see that we're into tons of resistance. So not only are we at the top of this range here, this channel where it connects this pivot to this pivot to this pivot to over here, on a confirmation basis, you have yet to confirm a breakout out of this channel. And the longer you meander along a level before breaking out, the more likely it is that you actually fail and break down. So tons of resistance here on the S&P 500. There is a gap fill up here that you could potentially float up to in the coming days if this spans out to be bullish consolidation. The only thing for the bulls is that you are inside of this green bar. So what you want to see is if this is to remain bullish consolidation, you want to see this consolidation remain inside of this green bar. And it could look something like this. So if we remain consolidating for maybe another few more days inside of this range, you could potentially see a move up. But ultimately, I do think the markets are extended, and I'm not banking on that move up. As you know, we have been accumulating short positions, and our account has substantially been benefiting from those positions that we have been accumulating. If we take a look at natural gas is interesting. We did close our short position for a beautiful gain. Obviously, we are seeing more downside in natural gas, down another 6.68%. We covered our short just right at the wick low yesterday, so we've missed out on a tiny bit of profit, but it was interesting because you did see that reversal on natural gas intraday action. So, you can't really get greedy on natural gas, but nonetheless, is there more downside in natural gas? Probably as the cycle continues, but there's still that backdrop that causes these wild price actions. And I just wanted to free up cash because considering we started shorting natural gas and we got paid out double digits in basically a week, I'll take that, pretty much any day that comes. If we look at the WTI is very interesting price action on oil. I do think oils are going to be breaking down out of this bear flag consolidation over here. One of the reasons I'm seeing a potential bearish consolidation and breakdown likely in the near future is simply because yesterday we had a closing low which closed below the 200-day moving average in a very long time. since basically early December of 2021, we had not closed below the 200 daily moving average. And today, you're also closing below it, but you're not getting confirmation because you're still closing what looks to be your 49 minutes left above yesterday's closing low. So, but ultimately, the longer that you trade below this 200-day moving average, the algorithms will also pick that up. People have to adjust their positions accordingly. As soon as we get that confirmation break, oil could see another quick drop to the downside in and around the range of 8 to 9%. I do think we go back to this pivot high. That was kind of before. Here you had your invasion, so we're already trading below that. But this is kind of where, chatter of Ukraine-Russia tensions, they started announcing like these preliminary invasion dates and what was real, what was not real. People were kind of hearing chatter about an invasion. So there was lots of speculation starting to appear in oil around this area, which is now interesting to note because we are trading below it. So we are short via the SCO. So if that drops another 8 to 9%, that would net us a beautiful, beautiful return nonetheless. Obviously, if we take a look at gold, since the US dollar was up, it put pressure on gold. So that is a nasty, nasty reversal candle. That being said, gold still has broken out of this short-term resistance channel over here. And I do think it could potentially just consolidate over a few days. I don't think the US dollar goes up much, much higher. That's obviously going to depend on what yields do. But I do think gold still has the ability to hold up substantially more, even if the US dollar continues to rise. It should put pressure on gold, but again, we could potentially start consolidating at a new upper range where we may get like a retrace back to this breakout channel if the US dollar pushes up, and then we could potentially get a move. So it could be something like a retrace back to there and then a breakout move up later into the month. So that's kind of what I'm looking for in terms of gold. Silver's really the same thing. And I'm just still watching AMD. AMD's had a significant bounce. It was down 10%. Now it's down 7.7. PayPal's starting to curl over. Starbucks is slightly positive in the after hours. And I'm just seeing if there are any other ones that I need to be putting on my radar. Occidental Petroleum also reports. That's a big energy oil play. But nonetheless, silver has had a nasty sell-off today as well, down over 1.95%. But overall, silver should be brought up with gold strength. The same on the downside. If gold is weak, silver will also be weak. Let's take a look at the Nasdaq QQQ. So the Nasdaq, also tons and tons of resistance. The first level I want to bring your attention to is that we filled this gap. Now the interesting thing is we have not been able to close above that gap fill high on the 29th of July for the last 2 days. So in the short term, that is showing relative weakness, but this is technically still bullish consolidation. You really want to see it hold this level. Obviously, if AMD is under pressure, that should put pressure on the semiconductors and tech. So we'll just have to continue to wait and see how the earnings actually play out, as price actions tends to whip around in all sorts of direction as we go. So the Nasdaq, but again, is into tons of resistance. Not only have you not confirmed above this gap fill resistance line, but you also have this trend line which connects this pivot to this pivot to this pivot over here to this pivot to this pivot. So multiple pivots. You had your impulse move breakout above that trend line and you failed to confirm above it. So the big level is, are we going to eventually close below this level and confirm below that level? If you confirm below that level, I think that's what's called a technical breakdown, and that should put the probabilities in favor of a move to the downside. So that's kind of what we are positioned for. I think the market sentiment with yields pushing up substantial or falling and triggering that neckline, I think a lot of people are putting too much emphasis on that head and shoulders pattern formation. And I think that the majority of the people are on the side that the bonds are now the way to go. Yields are done rising. They're going to start falling pretty sharply and precipitously, and that should light a fire under equities, and it's now buy. So whenever there's too many people on one side of the fence, that's tend to when things go awry. So the big level is that we're going to watch on that US 10-year yields, and I think that's pretty much going to be the market, the next market dynamic over the next, basically the remainder of this week, is what do yields do? do yields recapture and confirm above this trend line, therefore negating this level, or do we finally pull off this neckline and start the next down leg in this head and shoulders pattern? So right now the head and shoulders is still valid, but there is the probability now with this candle formation that we could negate this head and shoulders. And if we negate that head and shoulders, the markets could start their next downside pretty sharply. Mark my words, if we negate this head and shoulders, the markets could start the next downside. And that's how we are positioned for. There's still a lot of bullish sentiment now that stocks have kind of broken out of some shorter term trends. But if you look at the intermediate and major trends, they're still technically in a down trend, a major downtrend. But this is the type of, market that bear markets do. They make the fools out of the both bears and the bulls. But if you trade the charts and just look at the price action, you're favored to perform better than most people. So let's take a look at Bitcoin. Bitcoin has had some interesting price action as well. So Bitcoin, obviously we sold. One of the reasons we sold our Bitcoin positions, and now we've played this Bitcoin I think 2 or 3 times now along with Ethereum. So we sold up here at this 23,840 and change level. That was a double-digit gain on Bitcoin. We bought around here, this 20,400. So one of the levels I'm watching, and this blue trend line is a huge trend line because that's your longer-term trend line. If I were to zoom out on the chart, it's a massive long-term trend line, which I will do. I'll put on the monthly. So you can see your blue parallel channel is your monthly trend line of support. So it connects this pivot to this breakout impulse zone, your pivot high, pivot low, pivot high, pivot low in your COVID crash. And now that's what you're kind of meandering and testing. So even if we flip back to the daily chart, we'll fix that. You can see that we've had a nice 1, 2, 3, 4, 5. This is still technically inside bar bullish consolidation because you're trading inside of this green bar. But again, if the markets are extended and if the downside is to prevail over in the S&P and the Nasdaq, it will put pressure on Bitcoin. We do have MicroStrategy earnings as well, which I'm just going to flip towards. They're usually not as market moving just because MicroStrategy is so correlated to the price of Bitcoin. But ultimately, this is still technically bullish consolidation. However, I am in the camp that we see potentially some more downside in the overall indices as we get these earnings reports sliding through. And ultimately, Thursday and Friday are going to be massive for the markets. Even Wednesday, I mean, technically Thursday is confirmation day for yields. So Thursday's confirmation on a daily basis. Friday's a weekly candle formation. So that's the day that I'm waiting for. I'm going to be getting a great sense as to what will transpire or what will likely transpire over the coming weeks once we get those 2 candle formations on Thursday and Friday. So there's going to be critical price action, but congrats on our Twitter. Congrats on our Lyft position today. They popped on earnings, and we're also shorting Plug, but overall we're net short. So let's see how it transpires since we are into these frothy retrace levels on the indices and many stocks. So let's continue to monitor the price action. Thank you all for being members, and we'll continue to issue some trade alerts and try to bank as many profits as we can as we head into the latter half